Welcome to the Apartment Guys, where we dive deep into all things multifamily investing. Our mission is to educate, inspire, and empower real estate investors to reach their highest potential. Each week, host Tate Seamer interviews high-level guests from all over the industry who are sure to bring valuable, actionable ideas that will propel your career to the next level. Whether you're just starting out or a seasoned investor, you are in the right place. And now your host, the Apartment Guy, Tate Seamer.
Apartment Guys Nation, welcome back. Another episode coming at you here shortly with Mr. Gary Lipsky. And we're going to go into some really cool, deep, in the weeds sort of stuff around asset management. And listen, this is like the third leg of the stool, if you will. If there's three legs of the stool, you've got finding deals, finding dollars, and managing your assets. That's it. That's what this business is. Find deals, find dollars, manage your assets, and get those business plans to work so that you meet your pro forma projections and that your deals are successful and produce happy investors and happy residents. That's the whole idea. So at Greenlight right now, we are cooking. I say that every week, and it's true. Like, just got back from Oklahoma City with our entire team and landed last night. We were there checking on the 51 unit Mariposa apartments that we bought that we're renaming the Edge apartments. You might find that interesting. We're rebranding and renaming our 51 unit building there. And so we checked out another 350 plus unit deal. Actually, two of those were one of which we're pretty close to landing, we think. We'll keep you posted on that. But we've just got a lot going on. We've got 192 units there under contract, should be closing here shortly. We have ongoing opportunity to partner with us here at Greenlight, and we'd love to get that discussion started with you whenever feels good to you to do so. We can really talk at any different level about really all things real estate investing. I come from the single family flipping world and have done just about all types of real estate deals in between single family and apartments. And so I can speak from experience to maybe where some of you might be right now and where some of you might want to be getting to. So that said, go to www.investwithgreenlight.com, investwithgreenlight.com to sign up for our investor list, to get on our list of updates and newsletters. We don't bombard you at all with email. You'll probably hear from us 2, 3, 4 times a month at the most. But we will be sending you updates on offerings and opportunities. And so if you want to stay connected that way, a better way or an additional way to keep the ball rolling forward for you would be to book a session with me at the same link, investwithgreenlight.com. I am more than happy to sit down with you for 10, 15 minutes, at least, whatever it takes to really get into what you're trying to achieve and what you may see as obstacles to getting there, and how we can work together to best address those obstacles and get you to the next level. If that's through passive investing in apartments, that's awesome. That's what we do. So with that, let's just jump right into it with Mr. Gary Lipsky. Hope you guys really enjoy this one. Welcome, everybody. We are stoked to have Gary Lipsky here on the podcast talking all things asset management. And we were talking before the show that asset management is like the third pillar in the stool, the stool, right? That you're finding deals in this business, you're finding the capital, do the deals, and you're managing those assets and getting the business plan in place and doing the business plan successfully so that you meet your pro forma's projections and your investors are happy That's game here, right, Gary?
Yeah, absolutely.
Yeah.
Absolutely. So, it's, people, the sexy side posting on Facebook and other social media is like getting the deal and we close, but very few people are talking about all the things that happen once you have the deal.
Yeah, exactly. And that's what we're going to do today. And I'm really excited about this because it's really our present and near future, and certainly extended future here as we get into more and more doors at Greenlight. We're at 320 right now, and we've got over 600 in the pipe, and so we're going to be at 1,000 here pretty quickly. And we're looking like we need to be with asset management quickly, and not just the four of us partners on it, but really have an expert set of eyes and hands and everything else on that part of our business. So I'm really stoked to dig into this with you. Quick bio, everybody, on Gary. Been a real estate investor since 2002 and has invested in over 1,900 units with 41 million assets under management and assets under management. And he's also the co-founder of the Asset Management Summit and the host of Asset Management Mastery podcast, and also the co-author of the book Best in Class, which is about asset management. So like Gary's got the media, everything covered, the event, the podcast, the book, appearing on podcasts. You're crushing it, Gary. And this is like really your secret sauce, right? Like the asset management aspect of this whole game.
Yeah. I developed it at a young age. I've always been an entrepreneur and developed those skill sets, managing other people, project management, developing KPIs, and those skills set a great foundation when I got into real estate full time and applied those skills. And I looked at my skill sets and realized that's the asset management piece is where my strength is, and just kept developing that from there. Mm-hmm. And I still learn every day from different people what they're doing differently, or something else that I should be doing. You never stop learning.
Mm-hmm, mm-hmm, totally. So tell me, before we kind of dig in and get to some gems and nuggets, tell me a little bit about Break of Day Capital and what you guys do and what kind of assets you invest in and that sort of thing.
Yeah. I'm based here in Manhattan Beach, California, which is in Los Angeles, and
very nice place.
Yeah, thanks.
That's such a nice place.
Yeah, we typically buy in Phoenix and Tucson, and I want to be an expert in the markets that I invest in. So we focus on there. We have strong broker relationships. We typically buy C and B class value add properties, and we have a great team in place. So over the years, it just gets easier because I've looked at hundreds of properties. I know what my team can achieve. I know what the rents we can achieve. So it's just, if we find a property that fits in our box, we'll aggressively go after it. Now, certainly it's a lot harder to get deals done these days as the cap rates have compressed. But, Phoenix and Tucson is where we typically go after deals.
Well, and you talk about rates compressing, and Phoenix and Tucson, especially Phoenix, is a great example of where that's happened. And I'm interested in knowing kind of how you guys, what your criteria is like in that market in particular, given the amount of competition for assets there, and relative supply and demand issue and lack of inventory, and just people willing to pay a lot more for cash flow there than they are, say, in a market like we're in, like a Oklahoma City, for instance, or a Tulsa or a Columbus, Ohio. Phoenix is hot, man. It's as hot as it gets, really. I mean, literally and figuratively on a real estate commercial multifamily level. You can build Class A there and do very well right now. I mean, which is a lot to say about it anywhere because of the cost to build. It has been so high, but you can really get that done. I know people are getting that done in Phoenix and in Tucson. So yeah, I mean, talk a little bit about that. Like, how are you getting deals done? Are you going strictly value add at this point in Phoenix and not requiring cash flow? How does that look?
Yeah, we're selling a deal in Phoenix right now under 2 years that, you know, we'll hit our projected 5-year return and exceed that in under 2 years. So
Nice.
it's great when you're selling. It's not good when you're trying to buy.
Yeah, right.
So, you know, I'm putting in offers. I'm investing final deals that, you know, let's say the whisper price was 30 and it's going to 35 million at the end of the day, you know, 10-15% above the whisper price. And on all these deals in Phoenix and Tucson. So it's hard. You know, obviously we're looking for off market deals because, you know, I'll get beat in a best and final pretty much every time because someone's willing to pay more. Cost of capital is cheaper, or they're a lot more aggressive on their underwriting. But we recently closed on a deal in Youngtown, which is part of the Phoenix Metro, that it's garden office space that we're converting the existing space to 40 multifamily units and then building 64 new units on that land.
Very
so
cool.
That's a way that we were able to buy a property dirt cheap and build at a very cost-effective price. And so we have that nice arbitrage that, you know, within 2 years, we can sell it at a huge profit if we wanted to sell it.
Right. Right. That's powerful right there. So that's a very creative deal when you've got a land development piece attached to a existing multifamily. We actually had one of those at a smaller scale here in Utah that we did, and are in the process of stabilizing the existing multifamily, but we sold off our land piece as an entitled land deal to a developer and cashed in on that way. You guys are doing it, you know, that it's super cool and smart to be. It sounds like this will be one entity or one asset when all is said and done.
Yeah. And we're, you know, I'm looking at value add deals. You know, in some of our deals, one deal we bought in February was student housing that we converted to multifamily.
Okay.
And it was just at a great price point. The seller wasn't doing well. We knew we can break up some units if we wanted to. And so that value is up, you know, easily over 50% in under 6 months. Another deal we got because the seller messed up on their prepayment penalty. So a lot of times it's
That's
solving people. Yeah, solving problems other people aren't willing to solve. It's, you know, the regular ones that we're all bidding on, you know, we haven't been successful on. It's the you know, coming up creatively to solve a problem. That's where we've been more successful.
Right. And, you know, having had a lot of experience in those markets is irreplaceable too. And, you know, I don't mean to be discouraging to listeners who are just getting started at all, because, you know, things can happen quickly and, you know, things can come together in a deal nicely and quickly. But, you know, sometimes it does take a second to gain your footing and get deals done in a market. And you guys, how long have you, it sounded like about 2016, you guys really got busy in the apartment space?
I would say even less than that, because that, you know, I sold my business at the end of 2016 and then really educated myself for a year as much as I could.
That's so cool.
Investing in other people's deals. And then that's when we started really, you know, looking for deals and you know, we were way too conservative in the beginning because we just weren't unsure. We hadn't, you know, gone through anything yet. So, you know, missing out on a ton of deals that, you know, I see coming back on the market now, and you kick yourself that, you know, I wish I was just a tad more aggressive and would have had a ton more deals and a ton more money for me and my investors. But so it goes, you learn and you just get better at your job, like anything. It's those, you know, those 10,000 hours, you know, that Malcolm Gladwell talks about, and you get better and better and better. And so then when you find something that fits in your criteria, you can jump faster than most people because you've done your work.
Yeah. Yep, totally. And you know the market, you know your price per door, you know your NOI, that your cap rate, et cetera, that you need to hit for it to be a win for you. So you can take a look pretty quickly at stuff and know if it's going to be something worth digging into and underwriting, or if it's going to be a pass. And that's very, very valuable, because you're going to, ideally you'll have a nice stout deal flow here in the near future, and you won't have the time to plug every deal into a spreadsheet. So you'll need to know your price per doors, quite frankly, in your market is like, you really should know that. If you're serious about a market, you should know what a 1970s Class C, 2-bed apartment and garden style in Northeast Oklahoma City is going to rent for $650 or $700, $750, right? That's something that it's my job to know that, as a market expert and as somebody that's investing not only our money but other people's money in these assets, and we need to know them like the back of our hand, and know the neighborhoods and the submarkets, et cetera. So that's exciting. So okay, so tell me a little bit about Break a Day Capital. Are there you have a team? What's that look like?
Yeah. So I have an operations manager. I have an analyst.
Okay.
And then we have some other independent contractors as needed. So relatively small. My last company, I had over 700 employees and about 700 independent contractors. Mm-hmm. And so it's nice to have a really small team. And as we continue to scale up and do 3 to 4 deals a year, we'll continue to add more people to our team. But right now we're able to handle everything that we have going on right now. And it's a lot of it's, building systems and, setting yourself up for success. In the beginning, we got kind of 2 deals at the end of, 2019, I believe. And I thought we were going to be cranking. And then obviously COVID hit and we had nothing for 13 months. And then we got a whole lot of deals, right? At the end of 2020 going into 2021. So there's I wish we could say, hey, we have a deal every quarter, and nice and easy for our investors and want them, but it just doesn't happen that way. But during that time, we really hunkered down on our skills and systems. So as we continue to add more properties, it just becomes a little bit easier because we built all that ahead of time.
Yeah, and you're just getting better and better at what you do, and everybody knows you. Your capital knows you better. Your lenders know you better. You guys are going to crush it. I'm very confident of that. And Michael Blanc, we talk about it almost every week on the podcast. Talks about the law of the first deal and how getting that first deal done is pretty mammoth effort for just about everybody that's ever done it. And there's a lot of there's a lot of you don't know what you don't know kind of stuff in getting that first deal done. Even when you have a mentor holding your hand or an experienced partner, you still, as an operator and as a syndicator and as a sponsor, et cetera, principal in the deal, are new, and there's things that you got to learn. And so we've gotten over that hump. We actually did the law of the first 2 deals at the same time. But then, the floodgates have really opened on deal flow side of things. Capital is coming along. Like, we're doing pretty well on that side of things as well. And have a lot of fantastic investors, joining us and partnering with us. And, this asset management piece is kind of a glaring piece for us. And we had our key principal in Oklahoma City with us, and he's kind of looking at me going, okay, we're adding 600 doors here. That's awesome. And they're, the deals are great. Returns look awesome. And they're going to be easy to raise for, et cetera. How are we going to manage them? And we have a killer property manager that we feel really great about, and feel like they have their ducks in a row and their infrastructure built and all the resources in place. We love them. But that doesn't disqualify us from our obligation to manage the manager, so to speak. right? Which is what asset management's really all about. So let's start to delve into that a little bit, Gary, and talk, KPIs and kind of asset management 101. We can basically look at this like, like we're really in the market for either a pretty heavy part-time or even full-time asset manager on our staff that would also help with due diligence items. And, so there's a lot that I'm sure that I don't know about this. And, I'm curious, you've got your director of operations. I'm curious, like maybe we could start off with like, what advice might you offer me and, in this situation that we're in?
Yeah. Managing the manager is really critical because they don't own the property. You own the property. They're just not going to have that same buy-in. So that's a critical piece. So you need to make them part of the decision-making process and make them feel like they are owners of the property, and they will go that much further. So that's really important. So when there is an issue, well, first off, you set your expectations up from day one. What you expect for everything, and go over and make sure they understand it fully. Then you need to do spot checks, and it's not to catch them, but you don't, just because they say they're doing X doesn't always mean that they're doing X. And we've had that problem before. Our property manager says, oh, this is getting, the dog park sign is up and the bench is done, or that unit's done. And when we do spot checks, we don't always tell them when we're visiting, and we'll go and sometimes find things that weren't done that that she said they were done. And we had to let her go because she was lying to us.
Right. It's straight up lying, right? It's doesn't work.
So spot checks really important. That you've got to do secret shopper reports, so we have this whole sheet. So we'll my operations manager, she'll email, she'll call, and then she'll do like through the website or another site once a month to see how quickly they get back. Do they respond to the specific questions she asked about the property? Did they include pictures, or did they, was it like a robot, or was it more involved? And we've had mixed results on that, quite honestly. And you've got to hold them accountable and talk them through. And it's not to berate them or micromanage them, but say, hey, this is an area of improvement. This is where we got to work on, because this is so critical. If we waited 3 days, they've already found another apartment. Or if we didn't answer their questions, that's gonna maybe turn someone off. So if we can nail that piece and increase occupancy, we can raise rents. And if we're raising rents, our NOI is going up through the roof. So just that little step has a profound effect on the value of your property.
Absolutely. This, to me, is where the rubber meets the road in this business, right here. Exactly what you're talking about. You do things right so that you can justifiably raise rents to market value. And, when you're dealing with Class B, Class C, you're not trying to crush the market rents. You're just, generally you want to underwrite pretty conservatively and go with, kind of that 60, 70th percentile range in, market rents, maybe 80th. But at the same time, like bringing that all together and enabling, like you said, the expansion of your NOI, which astronomically, expands the value of the asset, or, exponentially expands the value of the asset. That's where this wealth is created in this business. And it's also where cash flow is created if you're buying right and you've got cash flow. Usually we try to buy properties that are cash flowing from day one, which is, why we're not in the Salt Lake market, for instance. We are in the Utah market, but we're currently not in Utah or in Salt Lake, just due to hyper compressed cap rates here. And we don't have the ability to go to our investors that expect and should expect ongoing cash flow throughout the whole of the deal. So yeah, I mean, this is super exciting to me. I love the spot checks. I love the secret shoppers. When you, so I guess just on a logistical level, let me just ask you this. Are you dealing with one property management company in those markets since you're pretty specific there?
Yeah. So
Okay.
they manage our properties in both markets. We have
Okay.
different regional managers, and your regional manager really is everything. If
Okay.
you have a strong regional manager, that'll really bode well. And one of our properties when we started, we didn't have a good regional manager, so we sat down with the owner of the company who manages over 10,000 units in that area, at least maybe 15,000. And we said,
Wow.
hey, and he never looked at us as a number. I mean, we had two smallish properties with him, but we said, listen, we're very forward thinking. We want to be our team to be use technology to try new ideas, and our regional manager just isn't. We're not seeing eye to eye. So is there someone else that really fits our criteria better on what we want to achieve? Because we want to, own, thousands of units in the area. We want you to be our go-to property management company. And, he identified someone that really fit what we were looking for. And it was just a world of difference. We kind of kick ourselves for not doing it earlier, but, the regional manager was very nice and was working hard, but just not a good fit for us. So, obviously make sure that the regional manager has that same method that you want to have, going forward as you kind of build out, in Oklahoma City.
I love what you did with the owner, and in that you created a vision for him or her to see what you're up to on the grand scale, like in the big picture, 30,000 foot view, right? You guys are building a portfolio of thousands of units in Phoenix and Tucson right now, and you want them to be a part of it and to be your guys and gals on the scene and managing these places for you. And so you create that kind of vision, either that he's going to align with it or she's going to align with it or not. And at that point, if you've got alignment there, then something like tweaking who's the regional manager on an individual property is something that's pretty achievable usually, right? Like, I mean, unfortunately, maybe they have to let somebody go, or maybe they move somebody somewhere else, that sort of thing. They make an adjustment, but nonetheless, you as the customer and as the client, it's just, the one being serviced here, have every right to insist on alignment with your interests and with your values and your culture and what you're trying to create. And so I really think what you did there was pretty cool. And we try to do that with brokers and property managers and lenders and capital sources. And like, this is a long game. And it's all about teamwork. It's all about having a powerful network of close people that you can call and say, hey, I've got this going on. I need this done like tomorrow. Can you, like, we've even got lenders that can fund in 48 hours if absolutely have to. Nothing real huge, but like, we can get smaller deals done in pretty quick measure. So that power team that you're building, like, listener, like, think about that from that perspective. So, okay. So you've got your director of operations. You are an expert in asset management. But you're probably doing a lot in the way of, I won't guess, but underwriting, deal analysis, because I didn't hear that you have an acquisitions person right now. Yeah, talk a little bit about that.
Yeah, I want to hire an acquisitions person. So it's funny you say that. We've been debating and saying, hey, maybe do we do one more deal and then pull them on? But I have an analyst that they'll do the initial underwriting, and then I'll kind of fine tune it based on my knowledge of the market, and talking to our regional or even other brokers. But the analyst does a really good job of in the rent roll and the T12, and we built out a pretty sophisticated underwriting tool, you know, we
Mhm.
bastardized like a bunch of different tools and then kind of improved it, you know,
Yep.
every 6 months based on, are we, you know, do we need to look at this with pref equity or
Yeah.
different ways, you know?
Right.
But yeah, I got my hands in a lot of the jars, and as we continue to build, I want to be able to have a team that, you know, I could stay at the 30,000 foot level and make calculated decisions. But yeah, you know, I'm definitely part of the analysis once the initial underwriting is done, and you know, because there's always, you know, with the lender, you know, do you get a little bit more leverage, or
Right.
um
Yep.
you know, tweaking all these different, you know, these you know, these pulleys and stuff to
Right.
finally get to like, okay, we're locked and loaded.
So at the end of the day, you're the deal maker right now. You're the POC for all this stuff. Point of contact. Let's make sure that's clear what I meant by that. And you know, like you're the one that's dealing with the broker, dealing with your lender, and coordinating everything, and you've got your operations leveraged with a team member, um, and I'm sure that you work very closely with him based on, you know, your expertise in that part of the world of this, you know, apartment investing, which is asset management and operations, right? So he's in essence your motor, would you say, kind of in the operations world and in the asset management world?
She is, yeah,
Oh,
yeah.
she is. Gotcha.
Yeah, so
Sorry.
she started off as my executive assistant,
Mm-hmm.
and then I'm like, well, you handle, you know, all the background stuff, all the operations. Let's move you up to operations,
Perfect.
and
Nice.
so and investor paperwork, any kind of paperwork, as much as I can give to her, like she'll handle research,
Okay.
whatever it is.
Okay.
She's great with that, so that I could focus more on the high ticket items, you know,
Mm-hmm.
as much as
Mm-hmm.
she could free me up, you know, our team, then I could focus on what's going to generate, you know, the dollars, and be the forward facing person. So, you know, they're so critical to the team. And obviously, it's not just me. If we're going to be successful, it's the team around me. And I want to keep working, like you said, with the same lenders, the, you know, property managers, whoever. It makes my life easier that we've been through a deal which is really hard to get done, and you know, we already have a rhythm together, and you know, not each
Yeah.
person is perfect for each deal, but
Right.
you know, you go back to them, and you share information, and you know, maybe on a deal I'm looking at, they can, you know, tell me if that loan is good or not, or
Right.
that property is good, whatever it
Right.
is. They're a wealth of information that I can use, and they know that I am going to refer them to other people and help their business. So it's that win-win, as you mentioned earlier.
Yeah. Yeah. And enrolling people in that vision for early on is, you know, is a wonderful thing. I mean, and this goes to mindset, right? Creating your vision for your 1 year plan, your 3 year plan, your 5 year plan, and knowing what you're about. And you know, you ask me what we're up to right now as a company. We're going to have 1,000 doors in Oklahoma City and 1,000 doors in Columbus, Ohio by May of 2022. That's what we're doing. So it's very specific. It's very, like, it's a statement of fact. Like, this is what we're doing. Right. So somebody that hears me say that hopefully sees me as credible, and believes that's what we're up to, and sees us getting there as well. And we're well on our way. And you know, like that enrolling conversation is so powerful. It's what you're doing all day, every day anyway, whether you're talking to brokers, employees, team members, partners, capital sources, etc. You are basically holding a vision and holding a space for what you're doing, and really bringing that to the conversation and creating that in reality through your languaging. And I won't get too deep in the weeds with neuro linguistic programming, all that. I love that. I geek out on that stuff, but we won't do that today. But there's really so much power in knowing what you're up to, and knowing what you're building, right? Like you don't just build a foundation for a house just to build the foundation. Like there's a whole thing there that you're putting together. And just because you've only dug the hole or poured the concrete doesn't mean that you're not going to continue. And in fact, it means that you're going to continue building that thing till it's done. And like nothing's stopping that. Right. So that's powerful. Any thoughts on that before we dig in a little more to asset management?
Yeah. I mean, intentional living, you have a direction. You've got that goal that you want to hit, and it just makes all your decisions really easy along the way because, okay, well, we want 1,000 units. So what do I need to do to have 1,000 units? Well, I know we need to build out a team. We need to build relationships. So it's just, like you said, it sets everything in motion. I 100% believe in that.
Yeah, for sure. Cool. So with asset management, what are some of the common themes that you find kind of move the needle, one way or the other in a significant direction? Is it, obviously vacancy's huge. Your concessions, loss to lease, stuff like that is big. Whether or not you're doing utility bill backs and charging for parking, all kinds of stuff that affect your net operating income, not to mention just keeping your rents where they should be, or where they can be. Right. So
so I'll start with a very simple, statement: being proactive versus reactive. So you take a bad asset and make it a good asset. You make a good asset and a great asset by just being proactive. It's not, what we're doing isn't brain surgery. If you're changing the branding on your property, you don't need to wait till you take over the property or wait 2 months later. Start doing it while you're under contract. Whatever you're doing, you want to stay on top of it and be proactive and not wait for it to happen. If you have 30% of your leases expiring in 1 month versus evenly spread out over all those months, you want to tackle that many months ahead of time, so that it's you don't have this huge vacancy at that point, and you can maybe split it up and have people get 7, 8, 9, 10, 11 month leases, or 13, 14, 15, and then spread that out over the course of the year and not wait till it happens. So that's very important. And
that's
then
creative.
obviously,
I like that.
Yeah, thanks. You want to break down everything. So if you're at 98% occupancy, you don't want to look at that as a whole. You want to see all the unit breakdowns, because you might have a unit type that is at 70% occupancy and everything else is at 100% occupancy. So you can raise the rents on all those other, anything that's at 100%, and the one unit type that's at 70%, maybe it's in a bad, has a bad view or something, and you need to lower it like $10, $15, and that could solve all your problems. So any task that you have, you want to break it down, and so you can see where the bottleneck is and ask the right questions to solve the problem.
Do you find that most of the conversations when you're talking about managing the managers, are they mostly like trailing 12 or trailing, conversations about financials and expense levels and vacancy levels, or do you find that you get into the more physical stuff of managing the property from a physical amenity type standpoint? Where do you find most of your focus goes?
It's really about asking the right questions. So they'll fill out our form, which is pretty detailed. So I'll have all the information before we get to our weekly Zoom meeting. So anything that's doing well, or I don't need to ask, we don't need to go over. I can just focus on the task at hand that we're trying to achieve, and we track everything on it's in a Google sheet. So each week we add a new tab for that week, and we could track the task, when was it assigned to someone, who, what needs to be done, when it needs to be done by, and then if it's complete. So if anyone forgets, they can go back to the Google sheet, and each week we can go to that Google sheet and say, well, that wasn't done. You don't want to be that person that didn't get that thing done, that task done, because it's all for everyone to see. So it really holds people accountable. And we're able to remember, because you're managing lots of different properties, all, it's constantly herding cats. So having that all there on the Google sheet is really important. But to go back to your question on the key things, I think a lot of it is managing that occupancy and the where you're pushing rents. If you're 95 or above, you want to keep pushing rents. If it's below, what's causing that? And that, I think that's the key thing that you're focusing on. Obviously, you want to check in. Hey, is there any crime at the property, or you're checking how many leads you have, and how many are converted, and what's working correctly. Is it a paid site, or is it a free site like Facebook Marketplace, and tracking that information for those conversions. It's not really as many leads, but how many are converted, and you want to follow it along the way. How many turn into applications, site visits, stuff like that. That's all the information that we get ahead of time, and so each week is a little bit different once you become stabilized. They're not going to be the key people that I'm talking about on the renovations. It's more likely going to be our renovation team that we'll use Trello to track, and we'll have a separate conversation with them. But they're part of it as far as knowing the lead time. Like if a unit's going to be vacant in 2 weeks, we know we need to notify, when we need to notify the renovation team and make sure they have all the parts and pieces they need ahead of time, so we're not wasting time. Right. So it's just making sure that communication is flowing well, and again, we're not being reactive, we're being proactive. So everything, we're shrinking timelines on everything that we do.
And you're reviewing metrics, key performance indicators, right? That they are tracking themselves. You're reviewing reports, looking at trends, analyzing where things could be improved, etc. Right?
Yeah. So we use RealPage, and that connects to our property manager's site, property management software that they use. So it was Yardi. Now they're actually switching to Entrata. But it paints a really good picture, all these different ways that we can look at things. We could dial into certain things. And it makes it really digestible. So obviously we want to see per square foot, rent continually go up over the course of the hold, and all these different metrics. So we can go into that, our KPIs, and really analyze each deal. We can look at it as a whole. We don't really like to look at our portfolio as a whole. We want to break it down per property, and then dial in, so that we can make better decisions.
I've been dying to ask you this for the last 20 minutes. Have you guys repositioned a property entirely, like turned in an entire tenant base in the course of, say, 12, 18 months?
We are working on that on one of our properties. So our first property we bought was a 42 unit, and we raised rents almost 50%. And we thought that we would change over the whole tenant base. We worked on the exterior first, and they all pretty much stayed.
Wow.
Drastically increasing the rent, which was really shocking to us. But they knew, one, they were really impressed with all the work that we did. And two, if they went somewhere else, they'd still have to pay that same higher rent. They were paying such inexpensive rent before. It didn't make a big deal. But another property that we took over in Tucson at the end of December, it had over 50% Section 8 when we took over. And nothing against Section 8. We did have some bad tenants in there. And so we want to get that Section 8 really down to 5%. Quite honestly. So it's taken time. We've had some crime on the property. We've had some issues, but we keep ticking away at it, chipping away. And I'd say we're probably down to about 25%. So we rebranded the property, and
that's what I mean. That's a full, like, for the listener, that's what I mean by repositioning. You're renaming the property, you're changing the colors, you're changing the logo, you're adding fencing, maybe you're adding landscaping, new signage, new facades. Like and then you're raising rents as you turn units over and improve the interiors of the units. That's a traditional repositioning of a multifamily asset. My understanding of it. So yeah, that's exactly what I mean. It sounds like you guys are, so you're in the middle of that one right now.
Yeah, so we are in our 9th month of that property. We were well above our pro forma rents already.
Isn't that great, man?
Yeah.
It's so great. We had that happen in our Utah property this year. It was amazing.
Yeah. But we still have quite a bit of work to do as far as reducing our Section 8 and finishing all the projects. I mean, we're, probably still 4 or 5 months out on finishing all the projects, but we keep pushing forward on all of it. And sometimes it's hard to get vendors out there, or they lack staff or quality people. So it's like that everywhere. And you go to a restaurant or anything you go to right now, it's just hard to find. Everyone seems to be short staffed, but we're chipping away at the projects and improving the property, and people like what we're doing there, and we're getting higher rents for it. So I'm really excited to see it change, but I'm excited for looking at it in 6 months and seeing what we've accomplished.
Awesome. So what would you tell me right now? You kind of know where we are and what we're up to. We've got, let's see, 4 properties under ownership right now, and 5 in the pipe, I think 4 or 5 in the pipe. So we're in need of somebody at least like what you have in your asset manager operation, or what you call it operations. My feeling is, do we go full-time, W-2? What are your thoughts on that? I'm just kind of picking your brain at this point.
Yeah. I like to go full-time if you're going to continue to grow and you're going to be in for the long haul, because that's something that you can't skimp on. You can have an analyst that can kind of, that's a 1099 for me, because the hours fluctuate. Certainly during the holidays, it's typically pretty slow. So that reduces my expenses, but having someone full-time on asset management, and particularly, as you grow, I think that's really important to clearly define that role and build out your systems, so that which is going to take some time and some learning, and some things are going to work and some things aren't going to work, and we continue to do that. We've been doing this for a few years now, and we continue to get better every quarter. We'll change something up and fix thing or improve something. So it's a continual learning process, but having someone solely focused on that will really help you, because particularly as you do more renovation projects and stuff like that, because there's so many moving pieces and so quickly it can go off track. And having that asset manager, clearly focused on that is really important. Going through all the financials every month, because they make mistakes all the time. On the financials. It's shocking, but they manage way too many properties, typically an accountant for the property management team, and mistakes, that we all make mistakes. So just like the accountant, they sometimes make mistakes. They'll charge something to your property by mistake, or double charge you, and so you really need someone to really go through that with a fine-tooth comb and make sure everything is correct.
You see this as an hourly position, salary, bonus? I
think you go salary
commission?
Based on what you told me. You want to grow 1,000 units in Columbus and 1,000 units in Oklahoma City. I think you invest in your future, that you need someone full-time, and maybe that person doesn't work out after 6 months, but now you've learned what to do right for the next person as you continue to grow. So I think you need to invest and take your asset management fees, invest in someone that's going to be doing it. Unless you have someone on your team, on your 4-person team, that's willing to, that's their sole focus. Have someone that it's their sole focus, and it'll free you guys up and be able to manage that person and focus on some of the other stuff.
Yeah. Yeah. That's perfect. Great advice. So are there any magic bullets here, like as far as, real profound needle movers in the NOI world? Whether it's additional income items, speak to me about that. Like, what do you guys see there?
You know, my answer would be no. There's no
Okay.
magical thing, but it's that continual improvement process on every single thing that you do, watching the expenses and each different income lines. And as you continue to, we talk about rebranding the property. I couldn't charge for covered parking in the beginning because I had all these Section 8. But a year from now, when my Section 8 is down to 20%, 10%, we'll implement covered parking, and it's in the process right now. Then I could start charging $20 per person that wants covered parking. So as your property continues to evolve, then you do different things. So it's every month, if you can continually tweak it a little bit, at the end of the year, now your NOI is up, depending upon the size of your property, 10,000, 20,000, 100,000, and divide that by your cap rate, and that's a significant amount of money. So it's paying attention to all these different levers over the course of time, and you can't do all of them at once. Obviously, it's too overwhelming for your staff, too overwhelming for you. Take things at each step of the way, and that will have a profound effect.
Yeah, it's just doing everything well, right? Like being masterful at your craft and all aspects of it in this case, and that's really what we're up to. And I'm really excited for you, Gary. I know you guys are growing, and we're maybe a step or two behind you, but we're on your heels. We'll be on your heels more and more, I hope. But no, I'm really, really stoked for your growth, and you're in great markets, and it sounds like you're really starting to hit your stride.
Yeah, we hope so. It's like there's a flurry of activity, and then things are like you can't find anything for a while, and then there's flurry activity. You get a couple deals, and then it's like, so I keep learning, keep getting better at what you're doing, and I'm in it for the long haul. So there's no gun to my head to do a deal that doesn't work, and we'll be here, have this conversation 10 years, 20 years from now.
Yeah. So let's end on that. What does the future look like for Break a Day Capital and Gary Lipsky, and maybe let's say 5 years, 10 years, whatever you feel confident or comfortable talking to?
Yeah. We hope to be doing, have $500 million of assets under management, but we want to do it, the right way, and it's got to make sense. Continue to grow out our team, and not bite off more than we can chew, and continue to be ahead of trends. That's really important, because things constantly changing. There was a year ago, people were looking for a lot of distressed hotels, converting that into multifamily. Like, where, do we need to switch to building new units, because buying 1973, C-class product for $250,000 a door in a market just doesn't make sense? Or do we need to be in another market? So it's just constantly spending time studying what's going on, so that we're not behind on what's happening. We're ahead of the game, and there's a ton of information out there, and it's just absorbing it all and making decisions based on all the information out there.
Awesome. One last minute here, just in closing. Tell us what the Asset Management Summit is like, and why we should go, why I should go. I'm very interested.
You talked about being selfish. Like, I'm selfish on that. I bring on, the top operators, and I want to learn from them as well. We don't have a lot of fluff. There's no fluff. There's no selling. It's just a great people sharing a ton of resources, and we do it for free. We have our sponsors kind of underwrite, they'll fund the whole thing. So I've learned a ton. Anyone I've spoken to that's been a part of it has learned a ton. So definitely recommend it. We'll do another one probably in the spring of 2022.
Yeah. So spring 2022 to be determined. It sounds like specifics, but I'm looking forward to that, man. I see just a ton of value there, and tons of other like cool peripheral reasons to do that as well. Like there's just all kinds of value there. So I'm excited for that. Listeners want to reach out to you, Gary. What's the best way for them to reach you?
Yeah, check out my website, breakofdaycapital.com. You could fill out an investor form or book a call with me. I'm on social media. Connect with me. Love to talk real estate. We have a YouTube channel. We're on Instagram. So yeah, we give out a ton of information. Definitely connect. And I look forward to connecting with you.
Yeah, awesome. So listeners, as always, reach out to these folks. Like, they're here for you, and reach out to me, and I'm here for you. My team's here for you. There's a reason why we do this, and why Gary and I are here. And it's because at least for me, I won't speak for Gary. It's because I feel so just daggone fortunate to be in doing what we're doing and in this space, and to have found this asset class and this business model. And I feel like I have to share it with people. And it's just like a moral imperative, as my friend Ruben Greth said, that we share this with everybody. So thank you, Gary, for doing that, and for, being available to my listeners, and offering all the wisdom that you have today. This has been fantastic.
Yeah, I appreciate it. Love what you're doing. And I'm excited to see your growth in the next 6 months, 12 months, 2 years.
Yeah. It'll be fun. We'll do this again in a year or so, and circle back around on all the things we learned that we didn't know about asset management. Right. Yeah. Awesome. All right. Well, Gary, thanks so much for this time and all your wisdom and experience that you shared with us. Really appreciate it. Listeners, thank you for listening to another episode of the Apartment Guys, and we will see you next week. Take care, everybody.
Thanks for listening to The Apartment Guys with Tate Seamer. Tate and friends are grateful to have you as a loyal listener. If you like what you've heard, please subscribe, rate, review, and share with friends on your Apple Podcasts, Google Play, Spotify, or any other podcast platform. Also, check out Tate's YouTube channel for videos of many of these episodes and more. Until next time, take massive action steps and rock on.